I think there are two factors which contribute to the moderation of Chinese export growth or below expectation. Number one is that global demand for goods seems to be now moderating when you look at US PMI, European PMI, even like Chinese PMI manufacturing has been weakening in recent months, and that's number one. Number two is that China also has an issue with the domestic demand, and therefore they tend to try to export more outside of China because demand is there. But then obviously the price is not helping them in the sense that when you export more beyond what is being demanded, then usually price goes down. So that two factors, both push and pull factor, affect the weakness in Chinese export. And I think the July number confirmed that trend.
With regards to Chinese exports to developed markets, how much of the problem is due to the political atmosphere? In other words, higher tariffs, higher trade barriers, and also much more scrutiny on product origins. And what will that look like if indeed we see a Democrat win in the White House later this year?
I mean, if you look at this from very kind of long-term, 5-year, 10-year perspective, Chinese export to DM has been stable pretty this way in terms of market share, but over the last 5 years, especially after the pandemic, seems that there is some moderation in the Chinese market share in DM market, especially in the U.S. and also more recently in European market as well. Obviously, the trade barriers are now going higher, and the tariffs are issue. At this moment, it's very difficult to say what that look like next year, given a lot of uncertainties, not only in the U.S. but also the European market as well. But we think that going forward, the upside for Chinese export will come mostly from emerging market and low-income countries rather than DM side.
Gohoon, can I bring in the currency at this point? And arguably, China's currency has been fundamentally weak, but has it marked it out as a funding currency? And could yuan be the next carry trade to unwind?
Thanks for the interesting question. Yeah, FX matters a lot for trade, and the standard textbook says that if your currency weaken against dollar, then usually you have the competitive advantage, you can export more. But in this part of the world, in Asia, most of the countries, when they're exporting, their exports are denominated in US dollar, not in their own currency. So at least in the short term, that is what is dominating. So in that sense, if the dollar is weakening and the CNY is appreciating, that actually helps Chinese export, because at the end of the day, China export per year is like almost $3.3 trillion, and compared to $2 trillion of US. So essentially, Chinese export in US dollar terms is the largest, even more than US export, which means that weaker dollar increase the purchasing power of Chinese trade partners, in a way, help them export more rather than less.